with Bitcoin in positive, but today, just few hours ago, Donald Trump opened his mouth and sent everything to the trash bin again. So what we are going to happen, what we expect to see in April, I don't know. That's why we are going to talk with our friend Batis Tochi from Indonesia. How are you doing? Marco.
Yes. Yes, guys, I had just a bit of lag. But yes, we're ready to discuss another episode. And yes, Trump is as usual, nothing new. Every time he posts something on Truth and on X, the markets react. So nothing new under the sun.
Yes, and here we are from Bangkok, Thailand, with Immortal. How are you doing?
Doing good, yeah. Trump said on that tweet that he's going to send Iran to the stone age. I think Trump is going to send the stock market to the stone age.
Already sent. So let's analyze what is going on. Well, the first news is not so bad news. Bitcoin stops 5 months losing streak. Bitcoin closed March 1.8% green after 5 consecutive months in red, but this was the worst Q1 in years. What do you think about? Marco is
first. Yeah,
you go first.
Yeah, I would say finally we saw some. At least on the monthly chart, a green candle. We were missing it. It's normally the green charts, the green candles are our friends, but over the last months, it was quite the opposite. So I think it's a very tiny relief that we had this green candle for the last month. I think we are still in a complex territory. We need still to understand what's going to happen in between US and Middle East, and geopolitics is still probably the most important driver for risk on asset and for Bitcoin. Great to see that at least we had 1 month in the green, but we are not out of the woods, I would say, and we still need to be cautious. Yes, what's your take on that?
The analogy that we used in the Spanish version of the podcast was when you're playing tennis, and it's that ball that hits on the net and it's indecisive, is going one way or the other one. It's usually just considered a lucky shot. So March for Bitcoin was somehow of a lucky shot, because in the middle of such a terrible March for the stock market, in fact, March was the worst month considering the previous 4 years. Overall, it was a drawdown of 7.7% in March in the stock markets in general, QQQ, SPY. Obviously, some tech stocks dropped way further than that. And even in that environment where you have a bunch of grade swan events, Bitcoin still hold the line. It holds so well that it ended up as that tennis shot that just hit on the net and barely moved to the other side to perform finally a little green and carrying that strike of consecutive 5 months in red.
Yeah, I think that what it shows, probably we know that was going to go green or red, whatever. I think that if Trump would have talked on March 31st, probably Bitcoin would have closed around -2% red. But what it shows to us, besides the green or the red, is that Bitcoin is showing signals that has bottomed. That's the biggest take on that. Not that it's green or red. Bitcoin as an very liquid, as the most liquid asset that we have on the market, of course, reacts to all the geopolitical problems much, much before than the other assets. So that's why we saw the big crash in January and February. And March, what it shows is that we probably have reached the bottom. And let's see what happened. I think that cannot go under 60K anymore. We see the bottom. Let's see what happened in this month. If we still have gray swan events or even a black swan event, because remember that Donald Trump said that the war was going to be only 1 week. Now, today, he said the war is going to go at least 3 weeks more, and they are going to send Iran to the Stone Age. That are not good signal for the market, and Bitcoin cannot escape to the market sentiment. So, yes, but what I see from this message from March is that it confirms that 60K is the bottom, and all the other clowns that are saying that we can see Bitcoin at 40, 35, is not real that.
Yeah, indeed. It looks pretty in a consolidation phase after the major sell-off that we saw starting from October 10. And it's some way it's still painful because many can argue that in November 2021, Bitcoin price was the same as today. But again, the number of people that bought the top in 2021 after a very long stretch bull run with the largest money printing that we witnessed over the last decade is now possibly the bottom formation. So again, if we put this lens, yes, it's painful, but it's in such a de-risk environment that, to be honest, it's pretty interesting if you can do DCA now to convert your salary, sell maybe other asset class to jump into Bitcoin again, because the scenario is much, much better today than 5 years ago. And yeah, I agree. It's maybe still, I would say that more than 50% likelihood that the bottom was 59. And the more time is passing, the more our thesis will be correct. So yeah, I think we just need to give some more time for the market to realize that Bitcoin actually is in a good position from there.
Yeah, that's the thing. What March is showing is, again, Bitcoin. We can tell that it closed break even because 1.8% is nothing. It's just something that could. But let's see, close break even. Treasuries keep buying. ETF. The ETF inflows were bigger this month. We're green this month. So I think that all are signals that the bottom has in. Again, we don't know what's going to happen with Donald Trump. I don't know what you think.
One thing is what Marco mentioned is the pass of time. Holding on this line usually build up this support level. But at the same time, I think it's also important to go through these gray swan events without being majorly affected. That also creates support, because on an environment where the Nasdaq dropped 7%, that Bitcoin has remained flat, it's a victory that also creates confidence and support that the wars might have happened, unless obviously something bigger happened, like a black swan event, let's say, something on the lines of they started an actual nuclear war in Iran. That will obviously affect all the markets again. And the other point that we observed during March, it was that all this bad news regarding the war, usually the leading indicator was oil. So, for example, last week we showed this analysis that we did with our AI agent, where it detected exactly the minute when the fake post about Trump saying we are in talks of peace with Iran, the price of oil drops 30% in a few minutes. And after that, Bitcoin follows, and the rest of the market follows in the other direction. Today, something very similar happened, even though we still didn't track it. But when that post of today of Trump saying we're gonna send Iran into the Stone Age, the price of oil rises by 5% or something like that.
5%.
And at the same time, Bitcoin drops. At the same time, or a few minutes after, which tells you that everything is sensitive to energy. Any world news, it affects energy first. And as an effect of that, everything else that uses energy, like Bitcoin, the AI companies, and so on, will move in the opposite direction. The weird part for me is that shouldn't be the case of pricing a company or even Bitcoin, right? Because the fundamentals remain the same. Bitcoin keeps doing a block every 10 minutes. It have the same supply, it have the same dynamics, the network is growing. So there is no negative news in terms of the functionality of the network. Same happened for the main artificial intelligence companies. NVIDIA keep producing chips, keep creating new business opportunities, business models. Tesla keep creating new products, is in talks on doing the SpaceX launch. So everything is good news in terms of the future functioning of these companies and the Bitcoin. But still, the markets react with just a simple tweet. That's the most crazy part to me.
Yeah, that is the most. And by the way, what we were analyzing today in our Spanish show was that the Bitcoin closing green was because a guy from Iran said that they are open to talk, and all the markets went up.
So we were actually break even on the last day of March, and then a tweet came out of this Iranian leader, or I don't know who it is, saying that we are ready to talk with the US, and then pumped the price from 66 to 69. It touched 69 a few hours ago. And then the opposite happened. So everything is moved through social media. It's amazing.
And the same happened on the last year, because if we remember the FUD of DeepSeek, then the tariff, all the things that Trump did last year, every time he opens his mouth or he uses his social media, he generates an effect. Mostly it's down. If Trump hadn't talked last year anything, probably we still see Bitcoin over 100K, the markets doing a great performance. But I think that I remember this episode of The Simpsons when there was German people coming to the nuclear power plant, and they were visiting everything, and they sent Homer to take care of a bee. So the Germans doesn't see Homer, and Homer didn't mess up, but he finally messed up. So I think that Trump should be witnessing the bee. So every time Trump opens his mouth, markets suffer. After Trump's speech, oil spiked and everything else went down. We can see what happened when Donald Trump's speech started. Bitcoin was going up, quite quiet, and then down. Now we are a little bit over 66. But again, the gold has dropped, silver has dropped, the futures have dropped. The only thing that went up was the oil, 5% in just, I think, that 45 minutes.
Yeah,
Keep
maybe
tuned for
guys,
the next week.
we will find out that Baron Trump will be already a billionaire with all these insider information. So maybe we will see soon climbing the billionaire Forbes index.
Let's see. But anyways, everything that is happening the price is reflecting the uncertainty on the markets with all this news. On the other side, we see a lot of good news. More companies adopting Bitcoin, ETF inflows going green, more adoption. So the fundamentals, if all the news that we see today for Bitcoin, we would listen to them 5 years ago, we would have said this is bullshit. And now there are only good news, and we are still suffering to consolidate over 70K. So, well, Nakamoto sells Bitcoin. David Bailey's Nakamoto Treasury sells 20 million Bitcoin at 20,000 US dollars, well below the average cost of 118,000 US dollars. What do you think, guys, about Nakamoto? I have my thoughts about this guy, but I want to listen to you.
Not a good vibe since probably the first videos that he posted as a CEO saying that he will buy a lot of treasury company, that they will become the global backstopper of all the treasury company globally, that they can do very easily quadruple money, etc. And I think the market is just showing that easy money doesn't exist and that those type of behavior are punished. And yeah, a lot of retail lost money, a lot of them, mostly majority of them, and just the insider took profit.
Yeah, I remember we talked about that a few months ago in one of the episodes. I think that in the channel that went to heaven. So we warned about Nakamoto a few months ago when the stock started dropping, and you pointed that, Marco. He telling, we are going to buy 1 million Bitcoin, we are going to do this, and that. And of course, there are things that are impossible.
I think it's people without conviction. Now, the same way they handle the Shitcoin magazine when they create these conferences that are supposed to be Bitcoin, and they end up being a shitcoin shit show. So I think the same way they handle this new endeavor of doing the treasury company thing. And obviously they failed there because of lack of conviction that is shown there, selling your Bitcoin.
Yeah, this happens when you are paper hands and have no conviction on Bitcoin. That's the main point. And yeah, they remember that Nakamoto is the same people who is behind Shitcoin Magazine and the Shitcoin Conference, that last year in Hong Kong with their drone show, they put 21 divided infinite. So, of course, not him, but
yeah,
and that's the show.
Middle understanding of the one of the most important meme on Bitcoin, which is infinite divided by 21 million, not the other way around.
Yeah, to be honest, I don't like this guy. I don't like this company. I can support if they are a treasury company buying Bitcoin, but if you sell Bitcoin, you are not my friend. I think that they should rename the company from Nakamoto to Buterin. So the last name of Vitalik.
Yeah. But again, I think it shows once again that it's not a problem with Bitcoin. Bitcoin is just a neutral technology. The problem is how people use Bitcoin, how they build company around Bitcoin, and what's their behavior. So Bitcoin doesn't impact negatively. It's just the people and how people use this technology. So again, Bitcoin is going to be perfectly fine. Those people will be remembered as grifters, scammers, and a lot of retail lost money, not because of Bitcoin, but because of how those people marketing themselves and how those people dump on retail. So the problem is the attitude of those shady people, not Bitcoin.
Yeah, the point is that we always discuss with Diego, these people, like the people from the Shitcoin Magazine, are people who discovered Bitcoin when it was super cheap. They held it for some reason, and they end up having a lot of wealth. But they don't have the conviction on Bitcoin. They just saw Bitcoin as a way to make more money. So that's the point. They don't have the real conviction as Saylor has.
This is the generation before Saylor. It's very common that they behave like that. We see many entrepreneurs, even in Argentina, that are exactly like this. They are just people who are on Bitcoin for the business that they can do, which is fine. Obviously, we will welcome any business that is involved in Bitcoin. But at the same time, it would be better for the Bitcoin ecosystem that these people are more like Jack Moller style, Sailor style, than these other ones, where the rule number one is you never sell your Bitcoin. It doesn't matter how shitty the situation is. So if you don't respect that rule, you don't deserve to be in the baddest motherfuckers club.
That's the point. Yeah, also like Jack Dorsey, that even though he's not pushing the institutional adoption, he's working a lot for the retail adoption to get payments on Bitcoin. But these people, yeah, they are, in English is opportunista, or they are opportunistic.
Terrorists.
And I think even more so in this case because he used the Nakamoto brand, which again, it's the name of the creator, the people behind Bitcoin, and then claiming that they could be reach the 1 million Bitcoin. So again, it's completely against any ethics, and it's, I think, as a CEO, you should be even being legally binded by completely frauding your shareholders, because at the end of the day, you are frauding them by saying unrealistic targets. It's like, I don't know, you promise that in the next quarters a company can 10x their revenues, and then if it's not happening, I think you can. Shareholders can somehow pretending I'll do a lawsuit or something against you because you scam them, literally. So I think it's in a similar situation. So let's see how it will unfold.
And I like your point on using the name Nakamoto. It's the same if I open a football club and I put Maradona and we play tennis. That's
a bad using of the brand.
It's a bad, or like I open a club like Michael Jordan, and instead of playing basketball, we play, I don't know, this game that's the thing, or ice hockey. So that's the point. So Mara Holdings sold more than 15,000 Bitcoin, and they lost their second place of BTC holders to 21 Capital, Jack Dorsey company. Now, the first one is Strategy. Second is 21 Capital with 500,000 Bitcoin. Third place for Mara Holdings. Then Metaplanet, really close. And then another that is Bitcoin that doesn't show here. But
this one I give it a little bit more respect than Nakamoto because of how the mining companies actually were born. They were born in the same business dynamic as gold mining had, which is you have an input, which is, in the case of gold mining, energy, human resources, machinery, time. You extract the metal. Once you get it, you have it in your hand, you sell it for US dollar. Go and repeat again. Every day you extract the metal, you sell it for dollar. So that was the dynamic. And then when the Bitcoin mining idea came out, most people understood it the same way. You mine Bitcoin to make it fiat dollars again, and that's it. And it was fine. I think for the first 10 years of Bitcoin, it was fine. I myself didn't even see it any other way also. So that's why I cannot blame them. Then eventually, after 2020, when Sailor started clarifying the thing or giving Bitcoin a different approach, I think it was probably Sailor who maybe inspired them to, at some point, I think they have some convertible bonds and they acquire Bitcoin, right?
Yes.
So, I think so. And they also developed this strategy of holding Bitcoin, and they become the second largest position. Eventually now, if under these stressing conditions in the whole financial market, they have to sell, I will give them a pass because of that history of the Bitcoin mining companies. That's what I see it different than in the case of Nakamoto. In this case, I don't have a problem with them selling them. In the best case, it's also a cleanup of this list of Bitcoin treasury companies. Now, the one that are going to run on top are going to be Strategy and Metaplanet, which are pure Bitcoin accumulation machines. The mining companies are a little bit different.
Yes. But anyways, you don't sell your Bitcoin.
I think we should separate the two because, as Diego mentioned, it's completely different, the business model. And again, Mara sold 15,000 Bitcoin, which again, it's a bit stupid because they before did a convertible, I think the first convertible notes at a certain, to buy even certain amount of Bitcoin, and then now in order to retire a portion of these convertible notes, they sold Bitcoin in an unfavorable position. It's true that a company can write the loss for the year, and then you can have some tax deduction, some benefits that a company can achieve rather than an individual. Plus, they have the entire strategy is mining Bitcoin, using energy, pay the bill, and majority of miners sell Bitcoin for running the operation. So again, it's miners are a bit in a separate category. Plus, we have to remember that for them, they're still the number 3, I think. Yes, as you mentioned here, Fernando, they're still number 3. And I think they did this move to retire these convertible notes that otherwise would have required issuance of equity and more dilution. And so probably they decided to do this operation. Again, it's not for sure like a good looking for them, but as a miner, they still try to be operational both on the mining of Bitcoin and also in AI. They are more an hybrid model. For many people, public miners should not exist. Majority of the previous miner like Riot, CleanSpark sold almost all their Bitcoin to convert and to move into the HSBC and the AI deals. Marathon still try to be operational on both. So let's see how it will plays out. But yes, I would justify much more selling to retire a convertible debt for miners rather than Nakamoto just blow up the entire strategy and fraud investors. It's completely different story.
Yeah, plus, again, Mara never said that they were a Bitcoin treasury company.
No, it's obviously was a miner, and now they also have other alternatives like going into data centers and AI, so it's fine for me.
Let's move to the next one, and we start talking about strategy now. Michael Saylor on the way to hold 1 million Bitcoin by the end of 2026. Analysts say that he could reach this mark by the end of this year. What do you think? Is possible or is not possible?
Marco?
I think, last week you guys pointed out the accumulation rate as of 2026, which was around 7,000 Bitcoin per week, which is insane. So if they are able to keep this pace, they can reach the 1 million mathematically within 2026. I think it's also possible because Stretch is again at par at $100. So 2 days ago, it traded around 500 million with the majority of the day at 100. Today, I think I have here the metrics. It closed again perfectly to $100 and 158 million of trading volume, which starts to be, constantly above 100, 150 million every day. So if strategy can capture 20 or 30% of it and issue new Stretch, I think we can still see in the next weeks pretty big numbers. So yeah, I think the probability of them reaching 1 million by the end of 2026, if Bitcoin remain this low in price, are pretty high.
There was another tweet that we read today that mentions that the trading volume was over 500 million yesterday. If it was true, I was very surprised because it could be a new record. Now you mentioned
it was 2 days ago because yesterday it closed at 158. It was the day prior, I think. When
the day before it was 500.
Yeah, 512, I think, something like this.
Okay. Yeah, that's impressive. I think if they keep the average around 200-300 million per day, they could mathematically reach the level to approach to 1 million Bitcoin. But it depends on, one, keeping that high pace on the trading volume. Two, the price of Bitcoin remains flat for the year. Because if here is the dynamic that might be weird. If the price of Bitcoin start growing again, my prediction is that the volume in stretch will also go up. So maybe regardless of what the price movement will be, they might be on a very fair trend to reach the 1 million Bitcoin for the end of the year.
Yes.
Yeah, because if Bitcoin price pumps, also the MNAV on MSTR will probably grow at a faster rate, so they can issue even more common stock. Yeah, this flywheel that sometimes seems too good to be true, but in some part of the cycle is 100% true and can be very, very accretive and can create a massive accumulation with these two instruments. So yeah, in both way, either if Bitcoin stay flat, they can still issue a lot of stretch, but if Bitcoin starts to run, the MNAV could expand, and so they can also have another lever to use it even more. So yeah, it's possible that they reach 1 million. Yes.
There was an advertising, an AI ad that they made, I think on Monday. Have you seen it? Some people
No.
complain because they are overusing AI for these videos. It was fine to me, but I wonder if the new record in volume was related to that advertising. What do you think, Marco?
Maybe, or for me, it was record because it also was end of Q1, because the record was at
Okay, yeah, that makes
1st of
sense.
March. So I think a lot of people might rebalance, close some position, or increase or add some position. So normally, when there is a end of quarter, we can see more, dynamics, or might be even a combination of both.
Yeah, no, the theory of the rebalance for the end of the month or the end of the quarter makes more
Yeah, it could
sense.
be.
Yes, despite the fact this week they didn't buy, they didn't announce buying. What do you think that was? Because they collected money last week via stretch, not too much, but to buy a few couple of hundred of Bitcoin, and they didn't announce. Do you see or do you know that if there is any regulation because the
I
end
think
of the
it's
quarter or
regulation.
something?
Yeah, I think it's regulation every time when there is when the quarter close. I think the ITM issuance on every instrument should be paused for at least 1 week or 10 days, something like this, because then it closed the quarter. So you need to put more or less the number, especially on equity issuance, on a break, so that you don't have this kind of weird increase of shares maybe the day before the quarter ends. So there is some SEC regulation, I think, on that. So I'm pretty sure that's why they didn't buy, because of laws and regulation. And we saw, I think, constantly over the years. So every time the quarter closes, the ATMs is not used.
Excellent. And talking about the main topic of this talk, as we were telling, gold crashes under 4,600. Over 1 trillion of US dollars were wiped out from the market today in gold only.
Yeah, it's weird because gold is supposed to react positively to bad worldwide events, but now even gold is reacting as another stock in the stock market.
Yeah, we can see the graphic here that looks like a shitcoin. So it
Yeah,
looks like a shitcoin.
welcome to our live, Peter Schiff.
So let's move. Strategy accounted for 94% of all Bitcoin purchases from public companies in March. 47,000 Bitcoin were acquired by public companies, most of all from Strategy. It shows who is the leader.
Well, yeah, no surprise, right?
Yeah.
Stretch has raised enough capital yesterday, in fact, on 31st, to buy more than 5x all Bitcoin mined. Stretch is back on pair, which means more Bitcoin for Michael Saylor and Strategy. And regarding Saylor, what do you think that he put again the laser eyes?
That I think the strategy has always been the same. It's pretty easy. They try to do the speculative attack on fiat. That the paper was written in 2014 by Pierre Rochard, and I think many people now start to realize that it's already 6 years actually that is doing that, and still majority of people don't believe in that. They think it's gonna go to zero and collapse because it's a house of cards. And again, each one of us needs to do the proper work, study, understanding, and try to do their own due diligence, because this thing is true, is real, and it won't stop. And I think it's just reiterating this vision.
Yeah, and it's also the conviction on the execution and the fact that they keep improving and iterating on new improvements of the execution plan. So they just started as holding it with the only goal of preserving their capital. Then they evolved into creating instruments that were at hand at the time, like convertible bonds. Then we evolved into preferred stocks. Now, out of all the preferred stock, they found this new iteration, which seems to be the most effective one in working as the perfect black hole inside the financial system. So maybe, as this has been the trend, there will be some other financial innovations along the way in the next 2, 3, 5 years for strategy, and eventually it might become the biggest company in the world.
It is. There is no second best. They will become the biggest company in the world.
The other fact that we pay attention last day, also in the Spanish show, was this fact that is not very well understood is when the other companies that have preferred stocks, these preferred stocks are, you have to consider basically two things. One is how much is the dividend. Two, what is the risk associated with that dividend. So that's the equation. So now the risk part, it's in traditional companies calculated as a function of future cash flows. So it depends on how well the company will do in the next years on projections of future cash flows. In the case of strategy, it's the other way around. We already have the money right now. We don't have to wait to see if Bitcoin do well in 5 years. Bitcoin can go to zero and they will still be able to pay the dividend for the next 24 months. So that's the dynamic that I see is still not well understood, and we need to push a little bit further on clarifying a very simple concept to understand is, do you have the money to pay right now, or do you need to create it through the business in the future? Which one is better? To have it right now, or to have it to wait that things go well in the future?
And on top, Diego, I should add that especially now with the fear of AI disrupting a lot of software business, a lot of even Mag 7 cash flow stream, because again, you can maybe do what a big company now is providing simply by prompting with the Claude or another AI. So maybe strategy is even in a better position because actually they don't have to create much, rather than stabilizing a product which is stretched and keep accumulating the Bitcoin. All the other companies are struggling to compete against this AI that is like big giants, and every day they are eating or they're removing customer to them.
Right.
And again, it reminds me the story of Saylor when he said during 2020, I tried for 20 years to try to compete with Microsoft and the other giant, and I couldn't not. Because they have monopoly and they are much bigger, they are much stronger, and they can steal even my best people. And he said, yes, you know what? I need to convert from the P&L into the balance sheet. And again, after 6 years, majority of analysts and people don't see this shift. Now it's much more important to have a strong balance sheet rather than a strong P&L, in my view. Because the P&L can be disrupted in 3 months.
That's the key point. Yeah, totally agree.
Totally agree. And let's go to the last slide of today. Stretch rate remains 11.5%. In April, returns will remain at same rate.
Here, the question is what's going to happen if eventually the volume traded in Stretch go insane do they still need to keep the dividend so high, or they can drop it down to something like 8%, which is still amazing when they have more volume in Stretch?
Yeah, I think it's a factor of the amplification that they want to keep around, I think, the 30%, and also by how it's designed. So I think they can change it by, I think, 25 or 50 basis point also compared to the software rate or the variable rate in the US. So it's somehow bounded to, I think, the amplification rate that they want to target, and from the interest rates in the US. So I think they should reduce it if they see that the demand is piling up, and if they exceed the amplification, because they need to break it down a little
right.
bit. Otherwise, they would expand too much, and they need also to expand at the same rate MSTR, the issuance on MSTR, to keep the amplification. So I think it's a bit complex to understand as of today, because there are so many variables at play. But theoretically, if the demand is very strong and the Fed reduces the interest rate, they should be able to reduce it and still the demand be there, which can potentially be a huge benefit, because it's less dividend every month to pay out. So
One of the speculation is if the Fed drops the rate while strategy keep it as it is, the demand will spike.
yeah,
So it's natural that they will adjust anyways. And it's entangled with these other variables, as you mentioned, the amplification, also the size of the whole structure, right? How big it's stretched, how big also MSTR becomes. So it's all entangled in that mathematics. But what I'm pretty easy with it is that they already have this structure preset very clearly in the math. So there is no random speculation, see what happens. So I think they are following a very clear path here.
Yes, that's it. Well, Marco, you had anything else to share, right?
Yeah, maybe just a couple of points that we can discuss before closing. So let me share first the Seita, which is the little brother of Stretch from Strive, that I would say finally is at 100. So Matt Cole, which is the CEO of Strive, posted, I think yesterday, that also Seita is now pegged at 100. It's very similar to Stretch. They have a larger range in which they can operate. I think it's between now 99 and 101. It reached 100, so it means that also Strive, in the concept of their preferred offering, is finally reached parity, which is very positive for the products and very positive for Bitcoin itself, because now there is also another buyer of Bitcoin, no matter which is the price, as long as they have the demand on the preferred. So yeah, I don't know, guys, what's your take on that, but I think it's pretty positive.
It's pretty positive. I think the change were because they were saying they were making clear that they are not going to issue shares under 100. I think that was one of the elements that actually push the price from the 95 range into 100 very quickly. But also my other question is, or maybe we can do a bet, how long it will take for BlackRock, JP Morgan, Morgan Stanley, or any of these bitches banks to create a product like this?
Yeah, that's a good question.
Because the same thing happened with the ETF, right? At the beginning, all of them say, no, that is for the terrorists, whatever. It took several years until BlackRock say, okay, we are in. And after that, now everybody is in, and seems like ETF existed forever. Remember, they didn't exist forever. They have big opposition until that damn crack, and BlackRock showed the light for the rest. Now that Morgan Stanley this week announces a new ETF, seems like normal, but it wasn't. It was
No, it
because
was.
there was someone previously
Yeah.
that actually showed the light. I think something like this might happen in a couple of years where when they realize that these products are so successful that now the big banks have to be in.
Yeah, could be, but two things. One, they need to start by Bitcoin because they cannot do with ETF because the ETF, they are just custodian of those Bitcoin, which are not BlackRock's Bitcoin or in the future Morgan Stanley or other big banks. So they need to buy Bitcoin and create their own Bitcoin position in order to do that. So if they do it, I'm fine with it. But second, I don't know if they will cannibalize their own product. Because I mean, the whole business model today from banking is that they said, yeah, give money to me, it's safe, I don't give you nothing. Because, but then if you say, yeah, JP Morgan offers me 9%, why should I keep the money in the other funds than maybe those banks are offering, other ETFs that are more volatile and less returning than this one? So I don't know if they will see some cannibalization effect on all the other business line that they have and can just accelerate the kind of implosion on themselves. I don't know. I think it's a good question.
Maybe they will have to give it a little tweak, like find a way. How do we monetize as a bank a product like this? Because in the case of the ETF, it's pretty easy. We just charge. I think Morgan Stanley dropped it to 0.14, which is pretty low already.
Mhm.
I don't remember the one in BlackRock 0.20,
0.25, I think.
25. So now in the competition, they start dropping the rates. So Morgan Stanley is coming with 0.14. Maybe the tweak is maybe I'm giving bad ideas to the banking cartel, but if you can embed some kind of fee into the dividend structure, you can still make money with a product like that. If you can prove, as strategy is proving, that is bringing one of the biggest trading volumes on the day on Wall Street.
Yeah, but at the end of the day, the banks, they can get money easy and keeps coming people. So they don't need to think about on this.
But it's also a defensive mechanism because they impose their own product, then they prevent SATAs
Others,
or strategy to grow.
Yeah.
But if you think, I think also Saylor, when he's doing his roadshow in the Middle East or also in America, is suggesting to those big banks, maybe do the same that we did with Stretch, but do it in a more compressed way so that the volatility is almost zero and you can give it as a form of real money. So like a stable coin kind of, because Stretch is not, So he's already pushing that because he knows that he's stealing market share from banks. So he's smart enough to say, look, guys, you can do the same. Don't use the preferred offering, which is more volatile, which is equity. Do a different form of blended product and use it, because he knows that ultimately, if they want to go into this direction, they need to buy Bitcoin. And so ultimately, he's supporting his own theory of the long-term play. So I think it's possible that some of those banks would operate in some kind of stable coin fashion, but with Bitcoin as collateral, because it's the only way to do it. That makes sense. And ultimately will enforce the power of strategy. Because they have monopolistic, kind of monopolistic position now with almost 1 million. So from each side we see the problem. It seems pretty bullish from strategy. If other institutions or companies are entering the space, because they need to buy Bitcoin and they need to create their own balance sheet they don't have.
Okay.
Yes, and you also wanted to show something related to the quantum FUD that we also spoke about in our Spanish show.
Yes. So I think I found this tweet very interesting because I mean everybody knows that Satoshi theoretically Patoshi, which was the mining of Satoshi, is around 1 million Bitcoin, maybe a bit more. But I wasn't fully aware that Satoshi was smart enough to create around 22,000 different addresses of its own 1 million plus Bitcoin, because probably Satoshi knew that putting all together in one single address would be kind of problematic. So this tweet for me was very important because I don't want to dismiss the problem with quantum, because I'm pretty sure at some point in the future we will have the quantum, realizing its potential. But again, it's not 1 million Bitcoin to be dumped simultaneously, because you need to crack 22,000 different UTXOs, which again, it's exponentially more complex than what I have in mind. So again, I just want to, I retweeted this tweet because for me it was great, easy to see, easy to understand that quantum might be a problem, but people saying that someone can crack 1 million Bitcoin selling tomorrow in the market, it's just a liar. It's just a malevolent actor that want to create panic into new investor, into new people entering the space, because it's factually wrong. It's not true.
Yeah, what we need to constantly repeat is that a quantum computer is not a more powerful MacBook. It's a totally different device that needs a lot of extreme conditions to operate. And today cannot hack one Bitcoin address. What the quantum computer, imagine in 10 years, if we have enough qubits to develop, it will take around hours to hack only one, to get the private keys from a public key of one Bitcoin address. And the addresses that are compromised are only 25%. Most of them are the Satoshi addresses. So it is good to know that it's going to take 66 years. And even though I repeat always the same, if quantum computer happens, because they are talking about quantum computer for a long time, and it's a real threat to Bitcoin, it's going to be a much, much, much bigger threat to other things, like your bank account.
Yes.
So I would be worried of other things, not only the Bitcoin addresses. That's the point. But some people like to post this to generate FUD to harvest some views for them. That's the thing.
I think some of the posts, they say that today will need 29,000 qubits for Bitcoin, but you only need 3,000 to hack any HTTP, the Fed, the Pentagon. So it's like going for Bitcoin is 10 times harder, and you still are very far away. Like, how many qubits are achieved today?
Less than 50.
50. So you need to go from 50 to 3,000 to just start hacking websites. Yeah. And then you have to go into 29,000 to start trying to play with one Bitcoin address. On that path, you have way more money to hack if the goal is money. In websites, military, the Fed, than the money that you have in the Bitcoin market cap, which is still a lot harder to do. So there is no incentive for me to do that. The incentive mechanism kills even the technical argument for me. If there is no incentive, even though the technical aspect is solved, then why would I care?
Yeah, and it's a great point, because imagine that Satoshi only had one address with 1 million Bitcoin. Then okay, I would accept more this argument that even if someone had a quantum computer, he can allocate, I don't know, 2 billion euro or 5 billion euro or dollars for to let him work, and can extract 100 billion in value for all the Bitcoin in one address. But if you need to repeat for 22,000 times this work, the economics are not probably working, because again, running for days, I don't know, 20,000, 50,000 qubits, quantum computer at full scale, it's super, super expensive. And I think by simply dividing in 22,000 addresses, Satoshi also kind of remove indirectly, maybe, this problem, because now you need to run for 22,000 times this complex, mind-blowing in terms of energy, in terms of cost effectiveness, this system. So again, I think if the biggest quantum threat is Satoshi's coin, I think this tweet almost dispel this theory, because again, you need to run it for 22,000 times. It's not economically viable, I think. Maybe in 50 years or in 100 years, maybe, but it's still de minimis. It's not really a big impact.
Yeah, because there was a paper published by Google that they said that they modified the Shor's algorithm. That is the algorithm that you use to go from a public key to a private key, and it could take 9 minutes to do that on a computer. But then they disclosed it could take 9 minutes in 200 years. So
yeah, you pick up whatever part of the narrative you want to create bullshit viral posts and make people scared.
For me, the quantum FUD is the same clowns that say Bitcoin is going to zero for no reason.
Also, the aspect, coming back to the incentive part, imagine that you now get access to these wallets from Satoshi, and you get it. Now you try to sell it and convert it into fiat. What's going to happen with the price? So this is like going after a honey pot, and once you have the honey, you shit on it. Now you cannot eat it.
Yeah, that's the point. Yeah, that's the point.
Yeah.
It would be funny to shit inside a honey pot.
With all the effort and risk that you put to find it, and then you shit on it. Yeah, it would be so stupid.
The thing is that, what these clowns that speak is because people don't understand how economy works, that everything it's moved by incentives. So if you go to steal a bank, it's because you have the incentive to get more money than you spend. That's the point. And of course, you put on the consideration. In Argentina, why the crime is so high? Because there is not enough, the cost of going and killing a person is nothing compared with the first war. So if I'm gonna go to spend billions of dollars to create a computer and have an address that probably has 100 Bitcoin, no, it's stupid.
Yeah.
So, Marco, thank you for being on the other side.
Thank you, guys.
It's been a great conversation today, and see you next week.
Yeah.
Remember, to our audience, what is your social media?
Yeah, on X, Batistoshi93. And hopefully we will have also some other segment. So last week was my bad connection. Hopefully from now on I have a more stable one. So maybe we can do another recording, or maybe on Bitcoin fundamentals, Bitcoin properties, because I think during bear market is the most important thing to reiterate why Bitcoin is different, and to people, hopefully, to give some knowledge out of it.
Yeah, probably we can do on the weekend. So stay tuned. Like we did last week on Saturday morning, but we couldn't finish because the connection was awful.
Yeah.
Now everything is good.
Now it should work. Yeah.
Much better. So yeah, probably we can talk about that and do something on the weekend.
Yeah, for sure.
Marco, thank you very much for your time, and thank you very much to everyone who is on the other side. If you like the episode, give us a like, subscribe to our channel, follow us on social media. Also follow Marco, because doing so, you help us a lot to paint the world orange. See you in the next episode of any of our podcasts. Stay humble, stack sats, and remember, we are all Satoshi.